Hey guys, welcome to another trade review. So today we're gonna look at this trade, and I was pretty much bearish because we have the pre-market making higher highs, and then just looking at just trading for the opening range gap midpoint. I was looking for a low hanging fruit objective. So during the opening range, 9:30 to 10 o'clock, price have 70% tendency to reach for the midpoint of a opening range gap, and this time it was a premium opening range gap, and that is why I was trading with. And you can see here it's already a small loss because this is what happened. No, actually, because I thought that it will not visit back the first presented failure gap, and it turns out that yes, I was wrong. It wants to use the first presented failure gap. The model was always first presented failure gap towards midpoint of the opening range gap. So here was a small loss because I just closed it because I knew that price want to trade to the first presented failure gap, then trade lower. And this you can see I'm trading with this failure gap, anticipating that this upper quadrant of the opening range gap will keep price below it, and also use this failure gap as a breakaway gap from the first presented failure gap. Because I was looking at the first presented failure gap as an entry, stop loss will be here, but it turns out that I was doubting it. So yeah, no problem. Just take the second entry with the failure gap, with the 950 macro, with the first quadrant of the opening range gap. And pre-market at this point looks very good. And then at the start of the trade, it was very like a low resistance run. Price was going to my favor, and I was just looking price to break through the 17th of June first failure gap, break through it, just go to the midpoint of the opening range gap. This is what price would usually do in a perfect world. And it did give me 40 plus points. Yeah, just looking if price want to continue climbing lower right now. Very nice expansion. This was exactly what I want to see. And in the perfect world, definitely this would have been used as a breaker. This small breaker just punch lower to the clustering of new day opening gap and first and new week opening gap. Also, we have the old first presented failure gaps here. And just looking at this 17th of June, first presented failure gap right now. And at this point, we are close to the 10 a.m. silver bullet. ES was showing weakness, which is nice. And then we have unfilled failure gap both in ES and NQ. Dollar was trading higher. Everything was perfect. Okay. And then at this, dollar ES actually made a new low. Dollar showing strength. NQ showing that wants to go lower also. But then we have this movement right here. So I'm looking at this small breaker host price. Does this act as an inversion? Because this move against my position could be just the silver bullet movement going to a short term premium before it goes down for more discount. And right here, yes, it did trade, but you can see that ES did not trade to the failure gap as well. So to me, at this moment right now, I want to see speed and expansion, or else I'm. So right now it's already a red flag for my position, and I want to see immediate reaction of the midpoint of the silver bullet failure gap. Because price did not use the upper quadrant of opening range gap to trade lower. Instead, it closed above it right now. Bodies are above it. And right now, last line of defense, what am I looking at? Yes, I'm looking at this week. It did not leave a swing high. It violates the midpoint of this premium red candle this week. It violates everything. And so I know that high chance I'm offside already. And I have two choices right here, whether to kill the trade or to just submit to the trade idea. And I chose to submit to the trade idea. You can see me typing, it's either my stop or I'm wrong. I'm going to submit the trade idea. And this right here, you pretty much know that it's not going to turn out well already. But stop loss is already placed nicely. Everything was with the logic. So if it stopped me out, it stopped me out. And there we go. Stop out. And yeah, this trade it was like first going to the 950 macro was like so nice. Feedback was very nice. And then later on it turns against me. It turns around. So and intermarket wasn't supporting it. So it was an acceptable loss. And yeah, you could have took profit share because it was a very nice 50 to 60 points run already. But I was thinking, all this right here was signatures of weakness, and it can very possible go way lower than my target. And I was just looking at this 30085 level. It's the lowest hanging fruit objectives already. And the fact that it did not do so, it used the first presented failure gap of the 17th of June, straight higher, back into the first presented failure gap. All this is just sign of it being a high resistance run. And yeah, I just stopped after this. Because before this trade, I already made back my ID recovered from my 150 or 160 points go down. And yeah, so my rules is don't lose more than $10 a freaking day. So I just decided to follow my rules, and you can see that price use this for the failure gap to trade higher. Did not fill this failure gap. Use this to climb higher. Use this as an emergent failure gap to climb higher. Then reach the new day opening gap. Yep. So I was simply wrong, and there's no problem being wrong because all the logic here was using the opening range model, opening range gap model, and yep, just a very good trade overall. And after this is all just demo practice. So yeah, that's it for this trade. I just want to say that learn to build in plateaus. Maybe that's a good idea. So we can say if you manage to fix your drawdown and really using the lowest leverage, there's a podcast where ICT mentioned building plateaus along the way, and yeah, I think it's a good thing to implement in my trading as well. So if I manage to recover from drawdown, maybe the next two trade is just going to be using demo because I'm really using the lowest leverage, and the goal is right now is just to make like 10% a month. So that's we shall see how things go. But just want to mention that building plateaus along the way, that is a very doable thing that I can do right now. So we shall see how does it affect my trading. So I'll see you guys in the next one. Because lately I've been listening to ICT podcasts and it just got me thinking, building plateaus. Why building plateaus, right? But if you ask me what do I feel after recovering my drawdown, what do I feel losing right away, being back to drawdown? I feel like drawdowns are indeed slingshots. So you draw down, you go a bit lower, then you climb higher, then you go a bit lower, then you climb higher. But if you ask me, like doing this trade, would I have taken profit here when it gives me like 50, 60 points? It just seems so heavy right now. You can see like it seems so heavy, and I can only say that in this current market situation where market is so uncertain, it can go both ways. So it's very 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 important to really pay the trader. Take something off when you have chance, especially when you are trading with just the minimum leverage where there is no partials to be taken. So right here, I would say if what can I improve? Definitely, I would say the stop loss placement. Since I was so confident that it will trade to the midpoint, definitely could have just pulled my stop loss to better than break even, or maybe just above the breaker, because if price wants to go there, there's no reason for it to trade back up. So I would say for this trade, one improvement can be done is the stop loss placement, the whole trade management. Otherwise, everything was just perfect. It was simply just wrong. But then, how do you manage being wrong? Yes, that's one thing. Just saying if I can improve something from this trade, but overall I don't really feel much also because the rules were followed, everything was followed, and there was no impulsiveness, no revenge trading or whatever. So yeah, pretty much a very good trade.